Hello there, good morning and welcome to News Express. Coming your way every single Monday morning right here on Africa Business Radio. Of course, brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. A lot of very interesting headlines right here on the front page of Business AM this morning. I'll start with the very first one at the top of the page. Fund managers, experts, optimistic. Chart growth at Business AM 2021 Mutual Funds Awards Conference. We have United Capital as Fund Manager of the Year. We have Quantum Zenith and Korea PAC, FCMB, Lead FSDH, ICO, category champions. Of course, Mr. Philip will tell us more about this particular awards conference. Just below that headline, we have economy to grow 2%, but challenges remain. This one's coming from Augusto. They are saying that links growth to better investor sentiment. They are saying they are seeing fragile macroeconomic and business environment. And of course, the pressure, according to what they are saying, remains from fuel importation. More on that one on the cover page. Quickly over to the summary section. OECD says global recovery in sight, if that's any consolation right now. In the investment and finance section, economic rebound seen in trade growth. That one's on page 10 of Business AM. We have Seplat commits to environment. You can pick that one up from the energy, power and renewable section of the paper on page 24. We also have some catchy headlines in the insurance segment, the transport business, and of course commodities and agriculture, where we have this interesting one on Nigerian beans and how they are to face EU test. I think I came across this one too over the weekend, how they've had to test, is it red beans or so? But you can catch up the story on page 24 of Business AM. I've got Philip Isakwa, the publisher Business AM, joining me this morning for conversations. Good morning, Mr. Philip. It's good to have you here.
Good morning, Rachel. Thanks for having me.
Right. Now, we are seeing a lot of really interesting headlines this morning. It's a new week and there's a lot to digest. Take us through what we should particularly look out for, especially as it concerns the headlines on Business AM this week.
Two interesting issues there. Economy to grow 2%, according to Augusto Co. And then the trade situation, the one you read out earlier, the optimism around Nigerian trade, report that came out over the weekend. Now, but interestingly, Augusto and Co are saying that the economy will grow 2%, but that this is linked to a better investor sentiment, and that is as a result of the climate has been a bit topsy-turvy over the last year or two, and that's been as a result of the COVID situation. But as again, we keep talking about vaccine rollout, as that continues to be widely circulating, then you expect that investor sentiment will begin to shape up. And they are also saying that the economy macroeconomic situation is still fragile. The business environment isn't particularly smooth yet. They have looked at different sectors. If you read through the story, you will see that Augusto and Co have looked at different sectors of the economy: the transport sector, the energy sector, insurance sector, and they've come out to say that the situation is still fragile for some, especially if you look at we picked up a story with regards to the insurance sector, where they talked about the insurance sector being particularly fragile as a result of what happened in SARS and the rest of it that happened last year, that sector will face some hard times, but overall they say a 2% growth, that's really still small compared to population growth of about 3% or so. You cannot be, an economy cannot be said to be growing perfectly if population growth is higher than GDP growth, or so there's still a lot to unpack here. Pressure is coming from fuel importation until refineries are down. 4 refineries are still down. Over the weekend, Rachel, you heard about throughout last week, or towards the end of last week, you heard all the noise about fuel pump price rises,
right.
And how it jolted the government, So sometimes these things come to you, and then you tend to laugh. You laugh because on one hand they talk about a deregulated approach to deregulation, and then on the other hand you hear government regulators, coming up and saying moving price, and then the political environment reacting swiftly because they know that it's something that they cannot easily deal with, and that's what you had in that situation. So fuel importation is going to still put a pressure on the economy because you're going to fuel prices crude oil prices are rising globally. I think it got to $70 per barrel. And with that, that's a lot. That's a lot if you're still going to continue to import fuel. And that's going to tell on pump price. So they said that's still a pressured environment, and that's still something to watch out for. If you go to there's something on the economic rebound scene, with regards to trade growth. And again, you talk about things happening in the last quarter of 2020. A lot has been into the last quarter of 2020. Even though there was a trade deficit of 7.38 trillion since the last recession of 2016, but some kind of stuff happened in the fourth quarter in terms of growth, in terms of how the economy performed. And that's been seen as a sign that we could begin to see something positive, coming from the economy in terms of recovery, and then you put everything together in terms of all we're talking about. We're looking at export particularly now, so you have a fourth quarter 2020 trade growth. Recall too that the GDP also grew. The positive we saw, even though the GDP for 2020 was negative at the end of the year, but there was a ray of hope, in terms of the growth that we saw in the fourth quarter. Recall also, Rachel, that we talked about how the growth that the economy recorded in the fourth quarter. When you look at it quarter on quarter against the third quarter, was the highest in the world, beating the rate of growth in the US, beating the rate of growth in Japan, and beating the rate of growth in some other bigger, in China as well, So you have to look at how the economy managers latch onto this. What particularly did they do, or what particularly happened? Can they replicate this, or will they just let it, happen by way of not engineering it, further? Sometimes the economy managers can just allow things to happen the way without tapping into what appears to be positive, and looking at indices to see what they can do, to make sure that that happens. Again, we will not fail to look at, of course, the agricultural situation, beans importation, export of beans, has been a lot. This has been long in coming. I'm sure it is no fewer than 5 to 10 years, that the export of beans, it has been banned, that's by the EU, because of the inability of the domestic Nigerian system, to particularly regulate the quality, and the quality of beans that is sent out. Apparently, it started out with beans being imported or exported into Europe, and then they discovered that the quality in terms of pests or the pesticides that were used, things like that, did not meet the standard of Europe, and there are two things to look at here. you have a lot of people in diaspora, especially in Europe, who will want to eat beans, people from Africa, people from Nigeria, so their desire to eat that type of beans still remains, But then, as a global commodity that perhaps is used in other things, you will want, and then as an export foreign exchange earning opportunity, you want to see that a lot is done to ensure that the quality that is sent to Europe, we were looking for diversification of foreign exchange earning. We're looking for means to earn this elusive foreign exchange. This is the opportunity we have.
Yes.
to begin put things right, and then to sort out ourselves in that regard. So it's what they say, it's open sesame. Nigeria needs to ramp up its game with regards to the quality of commodities that are exported to Europe and elsewhere. The interesting thing also is to look at the conference that took place last Thursday, regarding fund management. We're talking here about collective investment schemes, which are generally called mutual funds, and this is particularly concerning, small investors, who do not understand the technicalities or the intricacies involved in huge money management. Rachel, you have say 1,000 naira, someone else has 5,000 naira, another has 10,000 naira, and there's very little you can do in terms of entering the market, but the collective investor scheme allows a pool of all those funds, For instance, you get 100 million people pulling funds together, say 1,000 naira or 10,000 naira, and before you know it, you're talking about billions, and the volume of funds that are under management, by these fund managers is huge, but there's still room, like Professor Uche Waleke, who delivered the keynote, said at that meeting, there's still a lot of gap, that needs to be closed in terms of for instance, they said it's only Lagos, Abuja, maybe Port Harcourt, that seems to harness the volume of funds that the market deals with. And for a population of about 200 million people, that is really what they say, nothing home to write about. So there's still a lot to be done there in terms of pulling these resources, and gingering the investment,
True.
Because, Rachel, money needs to be pooled domestically. We need to harness money for the purpose of investments, and we need to gather these resources across board, across the entire length and breadth of the country. And if the statistics that were reeled out at the conference suggest that there's still a lot to be done,
All right, Mr. Philip, we'll just wait and see how these stories develop in the course of this week. Thank you so much for joining me on the show.